What are the requirements to file income tax return? Income tax return is a compilation of all the sources of income and TDS made by him, TCS tax collected source on behalf of him, and also advance tax paid by him, and all these things will be reflected in the income tax return to be filed by the taxpayer. Every person to file his income tax return should have a PAN card, and that PAN card should be linked with Aadhaar card. Also, he is having the residency status, how many days he stayed in India. If he stays in India for more than 182 days during the year April 21 to March 22, he has to file his return of income. Family members, suppose so there may be family members of children, they are having education, the senior citizens, parents and dependents, and any amount has been spent for their welfare or for the education, that amount, to claim that expenditure, is also the person has to file his return of income to set off that expenditure as a deduction from the income earned by him. Sources of income. How many sources of income the taxpayer is having is the most important. Sometimes people may not know, may not be willing to disclose the sources of income. Maybe they may be having, say, pension income, interest from banks and deposits, rental income, and some other incomes, but they may not be willing to disclose the income. But income tax department expects the taxpayer to disclose all his sources of income and claim the deductions, exemptions available to him, and pay the tax liability if any. And details of income source wise. Source wise income is also most important, because the income tax is paid on all the sources of income combined together, and after deductions and exemptions, the tax liability will be arrived, and that will be paid by the tax liability will be deducted by with the TDS or TCS or advance tax paid by the taxpayer, and the balance he has to pay while filing his return of income. Self-occupied house. The person may be using his house only for himself, for family purpose, and not getting any income, either rental income. He has to claim the rent interest paid on a loan taken for the purchase of that house. To claim that benefit up to 2 lakhs rupees, he has to declare that his house was occupied by himself and no income derived, and that he is eligible to get deduction of rupees 2 lakhs on interest paid towards housing loan. Next, bank statements. Many persons may be having many bank accounts, and the person has to collect the bank statements from all the banks and branches, from post offices, banks and mutual funds, anyone where you are getting source of income, where you are having transactions, financial transactions. Better to obtain the copy for the transactions entered into between April 21 to March 22. Next, income evidence for income earned. Suppose a person is earning an income from pension, he has to get the evidence of how much amount is paid by whom, by which department. He has to get the certificate from the paying department, as well as the interest earned on interest on deposits. The payer has to issue a certificate in Form 16A, and that has to be that is evidence for the incomes earned by the taxpayer and tax collected by the payers. And Form 26AS. This is the statement maintained by this is the record maintained by the Income Tax Department about the TDS made, tax collected source, advance tax paid, self-assessment tax paid, and any other taxes, including GST transactions also. The details are available. The taxpayer has to use the information available in Form 26AS as the information in filing his return of income. Next is 26AIS, Annual Information Statement. This is the details maintained by the Income Tax Department for the transactions entered into, the information collected for every taxpayer by the Income Tax Department. That information is made available to the taxpayer to help him to file while filing his return of income. And evidence for deductions claimed may be education expenditure, housing loan, insurance premiums, interest payments, savings, donations. All these details, what are the deductions to be claimed, the evidence needs to be made available, evidence needs to be maintained the details needs to be provided, included while filing the claim, while claiming the deductions, Exemptions, evidence for exemptions. The taxpayer may be having exempted income, maybe agriculture income like that, which is not taxable. The taxpayer has to maintain the details of his land holding, crops grown, sale proceeds, and expenditure thereon. That will to claim the income, agriculture income as exempted income. Gifts given and donations paid. Gifts given, the taxpayer may be giving gifts to family members or outsiders. If the gift is given to family members with true love and affection, and that details has to be disclosed in the return of income, and also the donations paid by him, he has to give the details along with the details of the ATG number by the donation receiving organization to claim the deductions as expenditure in the return of income. Advance tax paid. Sometimes the taxpayer, if the tax liability is more than 10,000, the taxpayer is under obligation to pay as advance tax in 4 installments. Suppose a person is having a tax liability of 20, expecting a tax liability of 20,000. He has to pay 5,000, 4 installments of June 15, September 15, December 15, and March 15. And all these 4 installments has to be incorporated, means the challenge has to, the details and challenge evidences has to be provided by the taxpayer. Bank loan statements. Sometimes the taxpayer will take loans for the purpose of education or housing loan, and to claim the interest as deduction or exemption, the bank's loan statements also the taxpayer has to collect, has to use and obtain and use that bank loan statements to claim the deduction, to claim the interest on such loans. Assets owned. The taxpayer may be having many types of assets, maybe movable, immobile, investments, any asset. It's better to maintain the details of assets, though it is not required to disclose in the return of income, but it is better to know how much income is around on which asset and what is the evidence for that, and when it is received, and all these details has to be maintained by the taxpayer to substantiate his income earned. Loans and liabilities. Loans and details of loans and liabilities also needs to be maintained by the taxpayer, maybe housing loan, maybe education loan, maybe any other loans. If he is obtained to earn the income, he is eligible to claim the interest paid as expenditure to earn that income, and also if to claim that the loans are available to meet the sources for the funds to acquire the assets. This is the source, and to claim that, to disclose the source available, the taxpayer has to maintain the details of loans and liabilities. Income earned on assets. Many assets will result into income to the taxpayer, and he has to maintain the details of income earned from each asset and for the period during the entire year of April 21 to March 22. Municipal taxes paid. This is municipal tax. Generally, every property owner has to pay municipal tax or panchayat tax to the local authorities, and any tax paid by the taxpayer to the municipal authority as property tax will be eligible for exemption, will be eligible for deduction from the income earned, and that details, that evidence has to be maintained. Expenditure incurred. This expenditure incurred with regarding the health care of family members. So any other expenditure to claim the expenditure of the deductions or exemptions, the taxpayer has to maintain the details and evidence also for that. Next, interest paid on loans. Earlier we have seen the loans available by the taxpayer. Now we have to see how much interest is paid on loans and which is eligible under which provision and against which income. The details can be useful to reduce the tax liability. Assets acquired, sources details. During the year April 21 to March 22, the taxpayer might have acquired some assets, maybe property, maybe deposits, maybe shares, maybe units, or any assets might have been acquired by him, what is the source available to him? He has to calculate whether the source is available to him, and how the different source was met by him, and what is the evidence for the source, what is the evidence for the difference gap between his sources and any assistance received or loan received from other parties. That evidence has to be the source assets with sources, assets acquired during the year and sources to acquire that source needs to be maintained with the taxpayer to clarify if any doubts raised by the department. Assets sold. During the year, the taxpayer may sell some assets, maybe properties, gold, any other asset, any fixed asset, the asset may be sold, and any profit arrived on that on sale of such asset means that is the sale price minus the cost of acquisition will be treated as the capital gain. If it is held for less than 24 months, means 2 years, that is short term capital gain, and the entire profit is taxable. If it is held for more than 24 months, means more than 2 years, the tax will be treated as long term capital gain, and the tax liability is only 20% after indexation benefit. Next, the taxpayer may be paying interest on education loan taken for the education of a child, and that interest is also eligible for the deduction for the taxpayer. He has to maintain the statement, and he has to provide he has to disclose the details and with evidence while filing his return of income. Housing loan installments. Housing loan, whatever the housing loan installments paid up to rupees 2 lakh, up to rupees 1.5 lakh eligible for deduction along with other savings under section 80C. So the taxpayer has to provide the details of loan interest paid on housing loan, so that is eligible as expenditure. Next, vehicles acquired. Sometimes the taxpayer may be purchasing the vehicles for personal use, and the sources for that also needs to be explained, because the department will be knowing the details of the vehicles acquired by you through the annual information statement or statement of financial transactions furnished by the dealers. So whatever the vehicles acquired and what are the sources for them and how much it is paid by the taxpayer and how much is as a loan, and the details for the sources needs to be explained by the taxpayer. Next, vehicle loan statements. Sometimes the taxpayer may not be using his own funds, he may be using the borrowed funds also to acquire the vehicle. The loan statements also has to be made available while filing his return of income. Next, reconciliation with the annual information statement and 26As. Sometimes the information may be correct in his account to his books of account, but may not be correct in the 26As or annual information statement. The taxpayer may request the information provider to rectify the details. Also, he may also request that the authorities who made the TDS to rectify the details based on his actual correct statement, correct information available with him. Share market transaction details. Nowadays, many people, maybe even students also, are opening demat accounts and doing business in shares, maybe futures and options, or investors or traders, and all these transactions will be made known to the Income Tax Department by SEBI, and all these details will be made available to the Income Tax Department. The taxpayer has to explain the sources for acquiring the shares and profits thereon, profits and gains, any earned on that, and has to offer the profits to tax, and if the loss is there, he can claim the loss to be carried forward for the next years. So, and also the taxpayer has to maintain the details of savings, investments, mutual funds, deposits, any bonds, debentures, anything, any investments he has made, and all these organizations, all these companies which accept these funds will inform to the Income Tax Department through statement of financial transactions, and that will be reflected in annual information statements. So the taxpayer has to maintain the details of all these investments made and along with the sources to make that investments. Next, income and savings, investments, deposits and mutual funds. Every investment may fetch some income to the taxpayer, may not be compulsory, but sometimes every investment may earn an income. Savings means the taxpayer may get income as interest, deposits also interest, investments may be dividend or share of profit, mutual funds may be profit. All these will be are liable to be tax and all the details has to be maintained, disclosed in his return of income. Foreign tours and foreign assets. Any person who is having amount of more than 2 lakhs towards foreign travels during the year April 21 to March 22, he has to file his return of income. And also, if any person who is having assets in other foreign countries, may not be in India, maybe in other countries. Now, in addition to India, or may not be having any asset in India, but maybe having assets outside India, maybe UK, US, or Australia. That person the taxpayer has to file his details and has to maintain the records and file the details. Electricity bills paid, and this if the taxpayer has paid electricity bills of more than rupees 1 lakh during the financial year, he has to file his return of income irrespective of his source of income or irrespective of his tax liability. All these are important information to be used to be made part of the income tax return to be filed before 31st July 22. Means for the transactions entered into from April 21 to March 22, the financial year 21-22, the taxpayer has to file his return of income before 31st July 22. Generally, many people who are not in business, they are in individuals. They may feel that we are not carrying on any business. Why should we file our return of income? We need not file our return of income. But under these circumstances, whenever the person is having assets, foreign assets, or receipts more than 2.5 lakhs, or having TDS or TCS, or paid electricity bill more than 1 lakh, or foreign travels above 2 lakhs, and all these under such circumstances, irrespective of the income and the person has to file his return of income last financial year, and to carry forward to the next financial year, to set off against the income of the next financial year, the taxpayer has to file his return of income before 31st July 2022. This is the last date for filing the return of income. The government may extend the date or may not extend the date, but we should always keep in mind that 31st July is the last date for filing the return of income, especially to claim the loss is the most important, and that has to be filed before 31st July 22.